Well, Jonas, thank you so much. Really like the technology. I've used it before, looking at projects like Mogotis, and I still have to check out Pan Global, though, that you have back there as well. So really appreciate you joining us. Interesting technology, because it gives you a bit of an overview, because not everybody can travel down to Argentina or Chile to go see, try to understand the scale of certain projects, right? We're running ahead of schedule. First time today, and probably first time to this conference, but I do appreciate it. And I'm excited to introduce my good friend Trevor Hall as our early keynote speaker, first keynote speaker of the day. Trevor is the host of the Mining Stock Daily podcast, the brain behind the Clear Commodity Network. He's assembled a group of podcasts that are now hosted under that umbrella. Agriculture, oil and gas, a couple other, uranium, I think, as well. Really, really good guests, really smart moderators and hosts. And Trevor does a tremendous job in our sector to bring some more transparency, asking really good questions, talking with the companies, and I really like the long-form interviews that you do as well, Trevor. Really appreciate you jumping in on short notice. Gold Sucks is the title. Please explain when you get on stage why you named the presentation that. And please, it's your stage. Thank you so much.
Thanks, buddy.
Thank you.
All right. I really don't think gold sucks. And as you can tell, I am not Dominic Frisby, but I do hope in his absence, I can be just as informative, and if I can even be 10% of entertaining and comedic as Dominic, I will consider this presentation a success, given a little short notice. We do hope he gets to feeling better and can join us maybe in November, right, Kai? All right, he owes me. He owes me, that's for sure. So I gave this presentation 2 weeks ago in Myrtle Beach, South Carolina for Jared Dillion's conference that he does every year. And the title of the conversation is Gold Sucks, because if you read the daily dirt nap from Jared Dillion, gold has had such a run up. He doesn't want to be the one, he doesn't want to like get all excited and get on his high horse. So whenever he's talking about gold, he's just going to say gold sucks, because it continues to go up as long as he doesn't call it out. So that's really why we titled it Gold Sucks. A couple things that I'm going to try to talk about with you for the next couple minutes. Sorry. I'm going to go through. We're going to talk about why gold has made such a big move here in the last 6-8 months, if not prior to that. And then, if I do have enough time, I'm going to attempt maybe to talk about a few story company ideas that I also highlighted in this presentation. When I originally gave it, it was an hour long, so I'm trying to cut it into a half of that. All right. So I think most people here have not been living under the rocks. They've noticed that gold prices have been running pretty hot lately. Obviously, seeing that correction once it hit 3,500. The question is why. Current global financial markets are navigating a storm of uncertainty fueled by a mix of persistent inflation, geopolitical tensions, and weakening economic indicators. Central banks, particularly the U.S. Federal Reserve, they're walking a tightrope between combating inflation and avoiding a hard landing in the economy. Meanwhile, tensions in the Middle East, ongoing war in Ukraine, volatile energy prices, they're all adding layers of geopolitical risk. Add to that a shaky banking sector in the US and parts of Europe, and you get a financial environment where investor confidence is absolutely fragile. In such a landscape, traditional market correlations break down, capital begins to migrate towards assets perceived as safe, gold being one among them. As a result, the gold's seen a strong rally, tearing into near and historical highs in recent months. Investors are not only hedging against inflation and currency devaluation, but also insulating themselves from systematic risks. Gold ETFs are seeing inflows. Central banks, particularly in emerging markets, are stockpiling reserves, and retail demand remains robust, specifically in Asia. The broad-based demand reflects a growing consensus. When trust in financial systems wavers and risk appetite decline, gold regains its luster as a universal store of value. In essence, gold is trading higher not just because of fear, but because that fear is now multidimensional, encompassing inflation, conflict, institutional fragility, and the potential for a deeper global slowdown. So when I was talking about, asking the question, why is gold making this move, I was trying to find a connection here. And I'm US, I'm based in Denver. I love film, I love movies. And one of my favorite movies of all time is The Usual Suspects. Has anybody seen The Usual Suspects? Oh man, only 3. This is the problem with this because I didn't know how popular it is here in Europe. Okay, so I'm going to walk you through The Usual Suspects. Hard to believe this film is 30 years old. If you have not seen it, I cannot recommend it enough. So we'll walk you through the premise of this film, The Usual Suspects. It's a neo-noir mystery thriller directed by Bryan Singer and written by Christopher McQuarrie. The story unfolds primarily through the interrogation of Roger Verbal Kint. He's a small-time con man and one of only 2 survivors of a deadly explosion on a docked ship in San Pedro, California. Through flashbacks, Verbal recounts the events leading up to the explosion, starting with a police lineup that brings together 5 criminals. They agree to work together in a series of heists, but soon realize they're being manipulated by a mysterious and feared crime lord named Kaiser Sose. As the investigation continues, Verbal's tale grows more complex, leading to one of the most iconic twist endings in film history. So to help us tell the story of gold, we're going to reference this film scene, the lineup scenes, the most fitting for today's market action. It's part serious and unfortunately somewhat comedic. As always, we've seen The Usual Suspects before when investors are void of certainty. So in the movie, the lineup were the 5 main characters. They're Dean Keaton, Michael McManus, Fred Fenster, Todd Hockney, and Verbal Kint. This is the first time they're brought together as a group. They're all suspects in the truck hijacking and are made to read a line from a card for a police mugshot. It's tense, it's gritty, it's meant to be serious, but it ends up being unexpectedly funny. In real life, that scene was not supposed to be funny at all. So here's what happened. The actors couldn't stop laughing. According to interviews, especially from director Bryan Singer and actor Kevin Pollak, the actors kept cracking up during this filming of this scene. Benicio del Toro, who played Fenster, he was particularly the instigator, and he deliberately kept saying delivering weird things and mumblings to the others, and had them all laughing and in stitches. They did take after take, but none of them could keep a straight face. Rather than fight it, the director eventually embraced the humor and they used to take the characters laughing, and it actually helped make the group chemistry more natural and real. Ironically, this unintentional humor gave the scene a more memorable and human touch. It also subtly foreshadows the twist, because from the start, we see that not everything is really what it seems. So what are the usual suspects that's driving the gold price? Let's go back, let's use this lineup scene here. First one, inflation. First usual suspect. Gold's widely considered a hedge against monetary inflation, which is the devaluation of paper money due to increased liquidity. Expectations and realizations of inflation can drive investment in gold. A hotter than anticipated inflation print might initially cause that knee-jerk reaction. However, fundamentally, higher inflation could support gold prices as it erodes the value of fiat currencies. Concerns about stagflation, which is a combination between weak economic growth and stubborn inflation, are seen as favorable for gold investments. The Federal Reserve's reaction to inflation through interest rate adjustments heavily influenced the investment landscape for precious metals as well. If sticky inflation keeps the Fed on hold, it could initially dampen enthusiasm for risk assets, but persistent inflation ultimately bolsters gold's appeal as a store of value. But that's just one of the suspects. Let's move on to the next. Interest rates. Higher interest rates have been seen as negative for gold as they increase the opportunity cost for holding it and strengthen the US dollar. However, this relationship, if you've been able to see, has become less reliable in recent recent weeks. It's very notable. Coming off what President Trump seemed unprepared for in the tariff announcement on Liberation Day, gold certainly was liberated from the bond market. The debt market response was to sell, raising the yields across the board to a point which required Treasury Secretary Scott Bessent to have a heart-to-heart with the president to lay off the tariffs so the bond market wouldn't cause more havoc in global economies. While the yields were rising and stocks crashing, gold became the go-to place for that safe haven allocation of capital. So there's two usual suspects. Let's go to the third, debt. And even more damaging is the runway for Secretary Bessent to roll over and refinance the US national debt. Significant amount of debt is issued in the low interest rate environment of COVID-19. It's coming to roll over here starting mid this year, so very soon, peaking next year and into 2027. The maturity wall will absorb liquidity that would otherwise flow into risk assets. Approximately 30% of US debt needs to be refinanced this year. And Janet Yellen's strategy of issuing a large proportion of that in short-term treasury bills now is about 22% of total US debt. That's made the treasury more susceptible to short-term interest rate movements. And with the uncertainty behind the tariffs and the ongoing negotiations with, I don't even know if there's like 100 countries, probably more countries than there are, the White House is beginning to turn some attention and also juggle the more tax cuts in the United States. My friend Paulo Macro, must follow on Twitter if you have that, calls the idea of further tax cuts a no-fly zone for the bond market. So if Trump continues to push the policy, we expect interest rates to respond to the upside in a more volatile move. The dysfunction in the Treasury market could force the Fed's hand, potentially leading to some form of yield curve control, which would influence, obviously, interest rates across different maturities and have implications on the gold price. But here's the one, the psychological usual suspect here, and that's fear. Fears in global finance acts as that powerful catalyst for gold prices, often sending them upward during times of uncertainty, which I think is part of what we've seen in the last couple months. When markets become volatile, whether due to geopolitical conflict or inflation spikes, banking instability, recessions, investors tend to flee riskier assets like equities and currencies and seeking out the safe havens like gold. Fear-driven demand is largely psychological, rooted in centuries of gold being synonymous for wealth preservation. Even in today's digital or fiat-based economy, when trust in institution wavers, be it central banks, governments, or financial markets, gold offers a form of security that doesn't rely on counterparty risk. Global financial markets are grappling with a potent mix of uncertainty, persistent inflation, diverging central bank policies, geopolitical instability, and fears of a recession. While some economies are showing signs of resilience, others are flashing warning signals, particularly in the US, Europe, and Asia. Gold is currently trading higher in response to all of this. So we have another usual suspect. We have 5 usual suspects on the board. And here's one, here's the newest, the most recent usual suspect. China. Its central bank has significantly increased its gold reserves in recent years, reflecting a strategic shift to diversify away from US dollar assets amid these uncertainties. Last year, 2024, the PBOC expanded its gold holdings by just over 44 tons, bringing the total to a record high 2,200 tons, making it the 6th largest holder globally. These are just numbers that are provided openly from China. They could have more. The accumulation aligns with China's broader efforts to be sanction-proof, its reserves and reduce reliance on dollar-denominated assets. After an 18-month buying streak, the PBOC paused its gold purchases for 6 months last year, possibly due to high gold prices. However, it resumed buying in November, adding another 5 tons to its reserves. This resumption indicates China's ongoing commitment to bolstering its reserves as a hedge against currency devaluation and economic instability. And the latest numbers I have are from March 2025. Their central bank currently holds just under 2,300 tons of gold. It's not just the central bank out of China. Retail investors have shown a growing appetite for gold as well there. In the first quarter of 2024, demand for gold bars and coins surged by 68% year on year, reaching just over 110 tons. The surge attributed to factors such as the weakening yuan, sluggish real estate market in China, and restrictions on cryptocurrency and foreign currency investments. There's just very little the Chinese retail can actually invest in, but gold they can. China has maintained a much higher savings rate than most Western countries, which is mostly cultural, less extensive social safety nets, and economic factors. So while savings in China are often focused on securing future and investing in property, Western countries have seen lower savings due to greater reliance on credit, stronger social safety nets, and a consumer-driven economy. So there's two different economic cultures at play here between East and West. So just like the movie in The Usual Suspects, in this scene, the lineup scene, Verbal Kint says, "It was the cops' fault. You don't put guys like that in a room together." Today's gold market is reacting to similar collision of powerful, unstable forces. Inflation, rising interest rates, unstable debt levels, geopolitical fear, they've all been thrown into the same economic room. Each one on its own can shake markets. Put together, they can create a combustible mix. Add China's massive retail gold buying into the equation, and you've got a global financial environment where pressure is building fast. The authorities, central banks, and policymakers may have underestimated what happens when these elements interact together. Like the detectives in the film of The Usual Suspects, they believe they could manage the situation. But the result has been more chaos, less control. The surge in gold prices in the market is the market's way of responding to a story that no longer adds up. Just as putting the wrong people together created something explosive in the movie of The Usual Suspects. Combining fear, debt, inflation, and uncertainty, this is driving gold towards an outcome no one can fully predict. This is where I get lost because I had to cut off a big portion of it. So in this lineup scene, it's chaotic, it's hilarious, and the unforgettable line that kicks off most iconic scene in The Usual Suspects. I'm not going to repeat it. I said it at Jared Dillion's conference, but it's a completely different audience, so I'm not going to say it here. But the five criminals, shoulder to shoulder, no one knows who's guilty. No one knows who's in charge. And most importantly, no one realizes that the real story isn't being told. It's supposed to be just a routine check. And it turns out to be the start of something far bigger, something manipulated. And oddly enough, this is exactly what the global financial markets look like right now. One which gold is foreshadowing and mining equities are betting from. First, the illusion of control. The cops think they're running the show. They think the lineup is procedural, contained, controlled. But Kaiser Sose, the ghost, is already pulling the strings. It's the same in the market. Central banks and regulators adjust rates like levers on a control board, but the truth is, the real power often lies in the shadows. Stability is like fool's gold. It looks shiny, reassuring, but it's brittle underneath. Investors chase safe assets thinking they've struck something, but many learn the hard way. As they assemble the players, the miners, the policymakers. In the lineup, 5 men are thrown together, different backgrounds, different agendas. They form a crew, not out of trust, but out of opportunity. It was the cops' fault. Remember, you don't put guys like that in the room together. But this is exactly what Yellen, Biden, Trump, Powell, that's what they did. In the investing world, we're mining value in the dark with central banks, hedge funds, crypto traders, sovereign wealth funds, all swinging picks at the same tunnel, but rarely looking at the same map. And like the miners underground, we hear distant rumblings. inflation, rate hikes, geopolitical tremors, war, recession, all of those fears. But we don't always know how to close or collapse things. The police follow Verbal Kent's story in the movie, connecting dots that were never meant to be connected. A name here, city there, it's just all smoke and mirrors. And likewise in markets, we chase data points, we chase narratives, we chase forecasts, often building entire themes on information that is as shaky as the rumor in a saloon. Gold is a great example. In times of fear, we rush towards it, the classic safe haven. But here's the catch. Investing in gold isn't the same as investing in gold miners, and we should know that. Gold sits still. It's a store of value. Miners, on the other hand, dig for the potential and carry the real risk. Their success depends on debt, energy costs, politics, geology. The shine may be the same, but the volatility is widely different. In a market fogged with uncertainty, it's easy to mistake one for the other, just like the cops mistook Verbal for a victim. And in the end of the movie, The Usual Suspects, Verbal walks away. The limp fades, the stutter disappears, and we realize we've all been conned. And these markets, they have the twists of their own. The assets you thought were safe suddenly tank. The undervalued stock turns out to be a value trap. The gold miner with huge reserves, caught in regulatory purgatory. That's the game. You think you're following the map to rich fortunes of a gold vein? You've actually been digging through someone else's narrative. So what's the key takeaways today? Actually, we're going to get to some stock picks, I think. Don't trust the story just because it sounds polished. Don't mistake calm for control. And in a market full of usual suspects, where some are digging for gold, others are spinning gold from fiction, always question the source. Because sometimes the real risk isn't the mine collapsing, it's realizing too late that you were never mining for gold in the first place. And just like in the movie, by the time the truth walks out the door, it's already too late. The greatest trick the devil ever pulled was convincing the world he didn't exist. It's one of my favorite lines in Hollywood history. But in today's markets, what's the greatest trick? Making us believe we understand them. So we're going to go back there. I did provide some ideas of stories that I've been enjoying lately. I get a little pushback on this story with the merger of Equinox Gold and Calibre Mining. I'm a shareholder of both. I firmly believe that when you have three of the top management teams, directors in the room with Ross Beatty, Blaine, Doug, that is a recipe for success. These three individuals are merging their companies. I know Equinox, the Greenstone stuff, in Q1 did not come out as planned. That one hurt. I would clarify their all-in sustaining cost was 33% over. That's what they reported in Q1. That was a hard number, which has brought the sell-off. I do like where it's trading now after this. It's got hit pretty hard, but I do believe these two, bringing in Darren Hall from Calibre, who is just an incredible mine builder and operator, having him run Greenstone and Valentine and any other operations out of this portfolio, I think you'd be really happy here in the next couple of years to have it. There's a couple other stories here. What we saw from the Newmont selling a lot of their non-critical assets over the last year, people picking those up. Orla Mining, Discovery Silver. Discovery Silver's been great. Tony McCooch is back. Mining gold in Canada again. Took Kirkland Lake from I think a couple bucks a share, and I think they sold about $30 a share. I can't remember, but it was great returns for investors. And they've had a re-rate because of the operation at Timmins. Yesterday, Lobo Tigre talked. Is Lobo in here? Lobo Tigre talked about his disdain for Mexico. I could fully disagree with Lobo. I think Mexico is a great place. I think the evidence is on the wall that President Sheinbaum is will do well for the mining sector in Mexico as long as the sector does well for themselves and don't screw up. We're seeing amendments to permits come through. What we are waiting for is that key new project permit in Mexico, but it feels like that's somewhere around the corner. Anyway, so they've got the Cordera silver mine. They're waiting for the permits, but in the meantime, they are producing gold out of the Porcupine project in Timmins. Hilo Star is another operator that picked up projects in Mexico. They are now cash flowing with small production from the La Colorada mine. I had a discussion with Charles Funk, CEO, earlier this week. You can listen to it on the podcast. They're hitting some super high grade from La Colorada, big surprise. They're also going to be reprocessing their stockpile, waste stockpile. Now with the gold price, they can kind of put that stuff through the process and get some more cash flow. They continue to hit at Ana Paula some high grade stuff, so that this company continues to be moving in the right direction and with cash flow. Another one kind of part of that, Integra Resources picking up the Florida Canyon mine in Nevada. You know exactly what it is, and they're not pretending it to be a low-cost operator. Their all-in is like $2,100 an ounce, but it's making money. And that's the whole point. They're using that cash flow to continue to help them with the permitting process. And at Delamar and Idaho, they will be probably working with the NEPA process for permitting here relatively short order. They have a lot of good contacts in Washington within the Trump administration, and it seems like things are moving really well. And obviously G Mining, like just absolutely crushing it. Complete evolution of what it's like to be a explorer / developer into a full front producer here. I like these stories quite a lot. On the exploration side, Collective Mining, absolutely tier 1 project already, just with the Apollo deposit on Guayabalis. They are going to continue to drill that. Probably won't see a resource on that until next year. I would not be surprised if they don't do that and you see a Great Bear type thing where they get bought out before they even put a resource on it. I think that's an option. I think that's something that certainly could happen. And that's just one deposit within the Guayabalis, and I'm just pulling out screamers almost effortlessly with the drill program. Kingfisher Metals doing a really excellent job. Dustin's here. If you haven't had a chance to talk to Dustin, please do so. He's just worked his butt off consolidating this area in the Golden Triangle. They are raising cash right now. He's going to go take a stab and hopefully make a discovery at the Highway 37 project. He's done a really good job of teeing this thing up for shareholders. Seems like he's raising money effortlessly, but this is one I think you should be paying attention to if you like pre-discovery plays. Big fan of Ridgeline Minerals, Chad Peters, and this is, he's, again, works his butt off in Nevada. They brought in South 32, joint venture partner, to start drilling this Salina project. They're going after this target, the Chinchilla sulfide zone. The geophysics are showing something absolutely incredible there, that with South 32, they can now go in and drill, hopefully make a discovery there. If they can hit this with South 32, that's really going to put Salina on the map. A lot of people are maybe a little bit liberal saying that it could be a potential Hermosa replica. We'll see, but they got to hit this first, so that's a story you should be watching as well. Counterland Minerals, serial explorers throughout Canada, some of the smartest people I've ever known. And just incredible management team, not only with exploration, but also with their budget. They do great deals, and they've been re-rated. A lot of the value is coming from the royalty on the Frotette project that they announced months ago, and so that's one to be watching. They got like 4 or 5 drill programs going on this summer within their portfolio. So again, could find meaningful discoveries. I have 2 minutes. I'm happy to take any questions. Thanks again for bearing with me. Again, I'm sorry that I'm not Dominic, but hopefully I was informative and entertaining. So, yes.
If the rate of increase of gold price is higher than that of the bonds of USA, would the US
I mean, the history of the U.S. government in gold is, you know, Roosevelt banned the ownership of gold, and then after Bretton Woods, the U.S. dollar was pegged to it. Maybe, you know, maybe. But I think they're more concerned about the sovereign debt rates going higher. 4.5% on the 10-year is dangerous. And as Scott Bessent said, judge us by what the 10-year yield is doing. So if that's what your judgment is, they are failing. No, there's no question. That's what Scott Bessent said. And those rates continue to go higher. So and with the gold stuff, I mean, anything can happen. So.
Do you see a scenario in which general public in the U.S. will rush to gold, like similar to 79, 80 scenario?
Yeah, I think when you see a huge market correction, more than we just saw in April.
Do you see symptoms of it now?
Yes. Yeah, I mean, the smart money, institutional money, they're not rushing back in. Warren Buffett's sitting on $400 billion of cash. Like, this move lately is that continued adage of retail buyers buying the dip.
But why Warren Buffett doesn't own any Newmont or anything?
No, he did own Barrick for like maybe 6 hours. A couple of years. I'm dead serious. Like, it was like he was in and like we're all going crazy because Warren Buffett bought Barrick. Well, he bought one of the worst miners ever. You know, like Barrick, Newmont, like those are hard companies to get excited about because there's the bureaucracy, the costs, all that, they just don't move as much as the gold price. And obviously their trusts represent that, right? I think the real beta, the real moves are gonna happen in the lowest cost producers, Agnicos, Lundin Golds, but then also the mid-tiers, like the Calibers and the Equinox. Eventually, hopefully Equinox can get their act together. Yeah.
With the big margins that the big producers are now looking at, even if they're talking between 12 to 2,100
Yeah.
out of the ground. But the margins that they're making now are such that they should, one would hope, be able to offer really attractive dividends that nobody could ignore. That might represent the starting point of getting more institutional funding or retail funding in if the dividends were attractive enough. Do you think that the producers are offering high enough dividends with these margins?
Yeah. No, it's a really good question. I think that you need to see multiple consecutive quarters of profitability before they'll even come to the table with a special dividend. I don't think current dividends are enough to get people really excited. You know, like I've allocated capital to emerging market ETFs that have anywhere from a 6% dividend to 11% dividend, where you're talking maybe a 2% dividend at the high level from gold miners. It's like, it's just not exciting. But on the retail side, like they don't care about dividends. I mean, like the retail side, they're buying zero-dated options. They're not buying stock. They're not investing because of the dividends. They're not value people. They are complete gamma momentum, double my money by the third hour of trading in the day or else I'm done.
There's maybe more institutional
Oh.
involvement from that side.
Well, and I think so. That's the case. Like from what I'm hearing is that over years and years, nobody interested in gold or gold mining equities. A lot of the big institutions, they don't have like an actual mining analyst. There's no information being fed to them, hardly at all. I mean, obviously the Canadian brokerages and banks have them, but very few in like, you know, Wall Street. So how are they going to get that information? They've got to see it, and by the time they see it, then they'll come running in. I think you're starting to see a little bit in the last couple months, but it's like it's calmed down with the market, you know, bouncing off of the recent lows. You know, there's just kind of a lot of uncertainty out there, but I think that they will come back. We just have to be super patient.
Now, actually, on the Trump lot, is it really so dumb? I mean, if you look at it like as an exploration company, before you need to do a lot of fundraising, you want to have the right stuff. So I think first in a big plot, whatever move, he actually moved in a lot of gold, because knowing
Well, I think there's a certain, like, talking about a Mar-a-Lago Accord that we've had discussions about on the podcast as well. There probably is a place for gold within that new monetary system. I don't know how it's going to be used, to be quite frank. Like, they did the same thing, rug pull. It's like, we're going to go see if the gold's at Fort Knox. But none of us have seen it, but we see Scott Bessent come out and said, oh, it's there. It's like, you told me it's, this is just as bad as the Epstein files. Like, you say you're going to release it, but we don't see shit. You know what I'm saying? So, like, I'm not banking on that all the gold at Fort Knox is there, but do I think it's depleted? Probably not. I just don't. I think they like to keep the ghost in the closet. So, anyways, cool. Thank you.